Hello, everyone. Testing, testing.
Yes, hi. Hi, Nicholas. Hi, Alex. Rahul here.
Hi.
Hi, Ro.
Hello. Hi. Can you hear us? Yes.
Good
Of
afternoon,
course,
sir.
I'm able to hear you.
Thank you. Namaste.
Happy New Year.
Happy New Year.
sir.
Yes, Alex, you would like to share the PPT?
Yes, let me just check that you can see it. Can you see it now or no?
Yes, yes, of course, I can see it.
Okay. 1 second. Just check that it. Just trying
Am I
to
the
work
first one
out.
to speak? I mean, after the intros?
Yes, Nicholas, what did you ask?
Am I the first one to speak after the introduction? Quick, a few minutes or not?
Of course,
Because I have a
Sandeep,
very
sir.
brief.
Sandeep, sir, are you
Yes,
there?
Nicholas is the first person to speak.
Okay. I have a very short presentation that I can.
Yeah, no problem. You will be
Okay,
the first
okay.
person to present, right? No problem.
Okay, great.
No
And
problem.
welcome, Nicholas.
Thank you, Sandeep, and happy New Year to everyone.
Happy New Year.
Happy New Year. Nicholas, you want to just share the PPT or something? You have to flip the pages once.
You check your presentation, Nicholas. It's better.
I'm sorry?
You check your presentation. You try to share.
Yeah. Let me set it up.
What's that?
All right. Let's see, because I'm somewhat unfamiliar with WebEx.
Alex, you have to go and run through the reading view.
Yeah.
Can you see my screen?
Yes,
Yes.
your presentation is visible.
Oh, this is not the one. Though.
Just change.
You change the present. You change.
There we go.
Yeah, absolutely okay.
Okay.
Alex, have you checked your presentation?
Yes, I'll do it again. If Nicholas comes out, I'll just share again.
I'm out.
Okay. Can you see it now? Can you see the presentation?
Yes. Yes, Alex.
Yes.
Would you like to change the pages? Yeah, just flip it.
Yeah. I'll just check. Yeah, the pages work. Brilliant.
Yeah, those are fine. Great.
I can see your Sandeep as well. Except you're on mute.
So changes and everything is okay now. Because we could see that presentation, right? Fine.
Yes.
So all set.
All set.
Hello, everyone. It's good afternoon, good evening. I hope I'm audible to everyone.
Yes, sir.
Thank you. So we welcome to the session 2 of the IVS 2025. I request everyone to keep themselves on mute. Thank you so much. And today's topic is IVS 101 scope of work. And we have today's guest speakers are Nicholas Konialitis. He is the Asia Director and Technical Director of the Business Valuation Board at the IVSC, having 30 years of experience in corporate finance, investment management, and business valuation. Currently, he's in IVSC. He's into the development and adoption of the valuation standards and best practices. I welcome Nicholas. Thank you. Then we have Alexander Aronson. He was there in the last session as well. I welcome Alexander as well. You know, it is an honor to introduce one of the speakers, Mr. Alex. He is also in the IVSC Director of Technical Standards, and he's having over 20 years of experience in real estate with a focus on international and emerging market. So yeah, I welcome Alex as well. And then we have none other than Sandeep Kumar Dev, sir. I welcome you as well. And without wasting much of the time, I would hand over the session to Sandeep, sir. Then he'll introduce on the topic and we'll forward from here.
Thank you very much, Rahul. Well, it's very nice to see that all people are joining from our neighboring countries as well as from India. Today we have with us Ron also from Israel, and definitely our today's guest, Nicholas, and the main speaker, Alex. Well, you all know that from 31st January 2025, the new IVS will be in operation, the International Valuation Standard 2025 edition. So our endeavor is to make the valuers compatible and make the valuers so that they can use the IVS 2025 smoothly. The transition should be smooth from 2022 edition to 2025 edition. So that is why the AARVF has arranged this training program for 8 weeks. It will be an 8 weeks long training program. And we are really grateful to the members of the Tangible Asset Boards, IVSC, and the participants who are participating here. Well, without wasting much time, I would like to request Nicholas to present and say a few words. Nicholas, please.
Hello, everyone. It's great to see you, and I recognize quite a few of the names on the roster here. So happy New Year to everyone! And again, I'm always delighted to talk to my Indian friends. I take it that you can see my screen. I have a very short presentation that I want to go through before I leave you in the capable hands of my friend and colleague Alex. And I just wanted to you know, put the basics and really give a framework about how one should understand these new valuation standards that are as Sandeep said, effective on the 31st of January 2025. And really, I just want to remind everyone of the mission of the IVSC. And we have two missions. One is to create those IVS, those standards that are freely available now on our website. And those standards are really there to ensure consistency, transparency, and comparability in the valuation of all the assets, regardless of the intended use of those valuations. The other thing is that we also understand that a valuation is never just a checklist. It is always a result of professional judgment, and that's why we have to promote the adoption of the IVS in an ecosystem that fosters professionalism, and that's true across all of the jurisdictions. And so it's really by understanding that you can see how the IVSC is really there to work for the public good. in all the countries it's present, and of course, India is one of our key jurisdictions. We have so one of the things that I should clarify is that the IVSC doesn't qualify any individual valuers. We leave that to our local members and what we call valuation professional organizations, or in the case of India, RVOs. And of course, you can see that ARVF, along with most of the RVOs in India, is a member in good standing of the IVSC. But there are other types of members. This includes corporates. It includes academic members, such as universities, and institutional members that are really those bodies and regulators that oversee the valuation profession in various jurisdictions. When you look at our sponsors, you'll find some big names. The big four are there: the AICPA, the ASA, and other prestigious organizations such as RICS that you probably all know. And then we have our members. We have our 200 organizations. Actually, it's more than that because it's been growing. It's been growing very quickly, and we're seeing new members, whether they are RVOs, whether they are organizations, corporates, joining us because they want to be part of this movement towards the increased professionalism of the valuation ecosystem. So we're an organization, we're based in London with an office in Singapore so far, but really our main resource are our volunteers. And we have 130 volunteers who are in various boards, and I'll get back to that. I do want to point out, however, that Indians and people of Indian origin account for the second largest contingent of board members in the IVSC. So we really embrace the point of view that comes out of India when it comes to both the elaboration of the standards and all of the promotional and the outreach efforts that we do. This is a quick organization chart of the IVSC. You notice the Board of Trustees. In gray, you have the various membership, advisory forum, Asia Committee, and Europe Board that are promotional boards. And on the right, you will see the various technical boards, starting with the Standards Review Board, which is the Apex Board. And then you have the 3 asset boards, the tangible asset, which is broadly equivalent to what you would see, what you know as plant and machinery, land and building. And then business valuation and financial instruments, which broadly corresponds to securities and financial assets in the Indian context. Another thing I would like to point out is that increasingly securities regulators and investors are looking at the importance at valuations, and that's why we operate under an agreement with IOSCO. IOSCO is now looking at our operations. They want to make sure, they have said, in fact, that valuations are important to the integrity of financial markets. And of course, SEBI is a member in good standing of IOSCO. And so you can expect to see more scrutiny by the securities regulators across the world of valuation matters. And before I leave you in Alex's hands, these documents are available for you, whether they're the standards, whether it's the red line edition that will allow you to compare the previous edition to the new edition, or the basis for conclusion that articulates the various choices the standard boards made. In conclusion, I'll just finish with this. The IVSC is a non-profit organization, and we work for the public good across the world. India is a very important jurisdiction for the IVSC. It's widely represented in our board members. We have strong institutional relationships with governments, RVOs, and private firms. And the IVS are referenced both domestically and by Indian firms that do work for clients abroad. The bottom line is that better valuations allow for better capital allocation, which facilitates economic growth. And frankly, given what's happening in India, this is really crucial. And again, really fundamentally, as you approach these international valuation standards, I would just point out that the IVS are designed to work alongside local laws and regulation. They are not there to supplant or replace local law and regulation. So effectively, what we always endeavor to do is to get the best of both worlds. Local regulation, local know-how, the reality of on the ground, and international best practices. And this is what comes together in these valuation standards. And with that, I will leave you to my fellow presenters who will go through scope of work and the other items of the valuation standards. Thank you very much.
Much, Nicholas, for putting the tempo of this program to a very high level, explaining the objective of the IVS and the importance of India. Rather, I should say Indian subcontinent to
absolutely.
IVSC.
And you're right. It's India. It's the Indian subcontinent. And of course, I know you will mention it about a dozen times before the end of the seminar. But of course, we are very excited to be in New Delhi, in Delhi in October for our AGM, which is really and conference, which is going to be a great event, and it's going to be the highlight of the IVSC, and I think of the global valuation profession this year. And of course, I'll be in India before that, but that's another matter. But the AGM and the conference that AARVF and RICS are organizing is going to be the highlight of the year.
Well, another beauty of IVSC is that, first time I came in contact with IVS in the year 2003, when I first time purchased IVS, a copy of the IVS. That time there was no, PDF document. I have to purchase it, the printed version in the year 2003. I have seen that there are boards. So I was so excited that will it be possible for me, someone from India, anytime in my lifetime, I did not know that time that I would also be there in the board. So it's a great opportunity, and it's a great experience to talk, to have interactions with the greatest valuers of the world, throughout the world. So IVSC has given the opportunity to the valuers of all the continents throughout the globe to interact with each other. If a valuer has the commitment, has the knowledge, has the confidence on him or her, he could easily be there in a board. So it's an opportunity to all the participants. I should say that every year IVSC, every year there are vacancies in different boards, in different committees. So if you are committed to evaluation, if you want to contribute something, I believe that IVSC is the right position for you. But mind it, my friend, it's voluntary. It's voluntary. So don't expect monetary benefit out of it. What you get, your satisfaction, and so that you can feel great that yes, I have made contribution to the global fraternity of valuers and for the improvement of valuation. Well, let me come to Alex. A person, if there is any publication from IVSC, you must know that one name should be there, none other than Alexander Aronson. He is the technical director of IVSC. And I am seeing that persons from Singapore annual general meeting, when I saw first time Alex, when he came out of the meeting to take some fresh oxygen. And that's a habit of, Alex, to come out of the meetings to have oxygen. And that's great. You will find him there in Delhi also, that he don't want to, don't want to take oxygen within the meeting room. He always used to come out. So no problem. But here is a person who knows A to Z of IVSC and IVS. Although he is there with scope of work, because he says that he loves to present that IVS 101. But he is the person to whom you can question from any corner of IVS, whether it is tangible asset, intangible asset, whatsoever you want to question, you can. But today it is absolutely confined to IVS 101. So without wasting any more time, it's Alex. Please come on.
Thank you very much. And I'm just going to hope that that you're able to see my presentation. So 1 second, I'm just sharing it at the moment. Can you see the presentation? Yes.
It is visible. It is visible. Okay.
Brilliant.
Yes.
So Good afternoon, Nemisphere. Thank you very much for having me here today. It's an honor to be presenting to AARVF, and a happy new year to everyone. I'm going to talk you through IVS 101 scope of work. But just before I go into scope of work, I'd just like to provide some clarity on a question that was asked in the last session on IVS 100 and on IVS and the printability of it. IVS is effective from the 31st of January 2025, and it will be freely available to everyone. So that's members and non-members from the 31st of January 2025. Access will be via website to non-members via filling in a form. And in answer to the question raised last week, IVS will be printable. The current version there is not printable, but once we make it freely available to everyone, it will be a printable version that you will be able to use. So let's look first of all at the scope of work. And at the top of here, you can see the chevrons. And when we were actually drafting IVS, we wanted to agree a valuation process that applied to all specialisms. So to tangible assets valuation, business valuation, intangible assets, and financial instruments. And you can see the chevrons here that they relate to all aspects of valuation. Everyone starts with a scope of work, has a basis of value, and uses valuation approaches, data and inputs, valuation models to their final documentation and reporting. So though some of the methodology may vary as we work across specialisms, you'll notice that the process is the same. And this is an extremely important chapter of IVS because it actually deals with your terms of engagement or your scope of work. So what you agree to do with the client. And you can see here that the chapter is divided into introduction, valuation requirements, valuation process review, and value review requirements. Now, one of the first things to note is the section requires the client and the valuer to agree the scope of work for a valuation or valuation review that is appropriate for the intended use. So, for example, if you're doing secured lending, you should probably be using market value. If you were doing financial reporting, you should be using fair value. And this chapter provides the minimum valuation or valuation review requirements for the scope of work. Now, a scope of work is sometimes referred to as terms or letter of engagement, and it describes the fundamental terms of the valuation or valuation review. And these include, but not limited to, asset and liability being valued, the intended use. Now, everything shown in italics here is also defined in the IVS glossary. And for the purposes of India, intended use you may also know as purpose. And it also highlights the responsibility of the parties involved in the valuation. So your scope of work has to describe the fundamental terms. And in terms of a valuation review, which I'll get to a little bit later, you've got to describe the components of the valuation or value that are being reviewed. And you'll notice later that there's two types of valuation review: a valuation process review, where you're looking at a report for compliance with IVS, or a value review, where you may be reviewing one or more components of the valuation, but you wouldn't be providing a separate valuation figure or value. And a scope of work is required for all valuations and valuations reviews, whether for internal or external use. And when we look at the introduction to the scope of work, you'll notice that the client and the valuer must agree the scope of work, and it must be appropriate for the intended use. So there should very much be a conversation between the client and the valuer to check that that scope is fit for purpose. That will avoid issues much later in the valuation process. And just looking at it, your scope of work and your report should accord with each other. So your scope of work is saying what you're going to do. Your valuation report basically says what you have done. And if in the valuer's professional judgment, the scope of work is overly restrictive, and there could be many limitations or reasons for this, then this may not result in an IVS compliant valuation. And remember, when you do get to the reporting section, there is an IVS compliant statement. So you would say that this valuation report has been prepared in accordance with IVS. Now, I just wanted to highlight again some of the definitions, first of all, that Sandeep did an excellent job on talking about last week when he went through the glossary. But I thought it very helpful to point out that a valuation is not a valuation review. A valuation is the act or process of forming a conclusion on a value as of a valuation date that's prepared in compliance with IVS, whereas a valuation review, you are reviewing parts of the valuation. But if a new opinion of value is provided, it is a valuation and not a valuation review. And, one of the reasons I wanted to highlight this is within the scope of work, you will note that there is a section on valuation review that I will take you through. And just to highlight again, because we will be going through it, there's two types of valuation review within IVS. There is a valuation process review, and this is basically where you are looking at a report and you are assessing compliance with IVS. So you are checking, have they actually gone through IVS correctly? Is this report compliant with IVS? A value review is where you're looking at components of evaluation. So you may be looking at the comparables to see if they're fit for purpose or the yields. But please note that this does not include an opinion of value. Hopefully you can still see the slides. So I'll keep going through. So
no, slides are not visible.
Okay, 1 second. It just suddenly did something strange on my thing. So I'm just going to hopefully resume sharing again. So you should hopefully be able to see the slides now again in a second. So my apologies for a little bit of technical difficulty. Can you see the slides now?
Slides, the entire screen. Yes, now it is absolutely visible. Please go on.
Brilliant. So apologies for that. So I'm going to first of all go through some of the scope of work valuation requirements. So the first one is the asset and or liability being valued. So the subject asset and or liabilities in the valuation must be clearly identified. And the client's responsible for the accuracy and completeness of that information. That doesn't mean that there shouldn't be some element of verification by the valuer. The client is the persons or entity who appoints the valuer for a given valuation. And clients can be internal, so if you're doing valuations for an employer, or they could be external when the valuer is engaged by a third party or third-party client. Now, also the scope of work must include the intended use, which is the reason for which the valuation is developed. Now, I'm aware, because I had many discussions with Sandeep on this when we were drafting, that it is also known as purpose in India. So when you're looking at intended use, you could also think the purpose of the valuation. You also need to state within the scope of work the intended user, so any party identified by the client in the scope of work as a user of the valuation. You need to identify the valuer, and the valuer can be a group of individuals or an individual in an entity, regardless of whether employed or engaged, and they have to possess the necessary qualifications, ability and experience to execute a valuation in an objective, unbiased, ethical and competent manner. And if there is any conflict of interest or bias potential, this should be disclosed in the scope of work. It should be agreed with the client. You've got to state the valuation currency. Now, in some cases, there may be more than one valuation currency that is used, in which case you have to state the currencies that are being used. The valuation date has to be stated. Now, the valuation date can differ from the date on which the valuation is reported. And in those instances, you should state the valuation date and the date of the valuation report. You need to state the basis or bases of value. And I believe one of my colleagues, a member of our board, will be talking you through IVS 102, basis and basis of value, next week. And it's got to be appropriate for the intended use. So you've got to make sure that you are using the correct basis of value for the purpose of the instruction. For instance, as mentioned earlier, secured lending would be market value, financial reporting would be fair value, and there are other bases of value as well. The report also needs to state the nature and extent within the scope of work of the valuer's work and any limitations thereon. And any limitations or restrictions on, for example, inspection, you may not be able to access all parts of a building, inquiry and or analysis in the valuation must be identified. And if relevant information is not available because conditions of the valuation restricts investigations, these restrictions and any necessary assumptions or special assumptions made as a result of the restriction must be identified. In tangible assets, or in the world of real estate, it's quite often that we would be supplying market value, but we would also be supplying market value or providing market value under the special assumption that it is freehold with vacant possession. So this would be another example of another assumption that should be stated within your scope of work. So just looking at further requirements within there, you must state the nature and sources of information upon which the valuer relies. So it's significant information upon which the valuer relies and significant verification or controls to ensure the accuracy of that information. So the valuer also has a responsibility to, when he is supplied with information, not to just take it as read, but they should also verify it. Any special assumptions must be stated within the valuation report. So any agreed special assumptions that are known prior to the valuation should be within your scope of work. You should state the use and role of a specialist, and you'll notice within IVS, we have definitions for a specialist and service organization. So for example, a specialist could be a building surveyor who you use to advise you on the condition of the building. A specialist could also be a plant and equipment valuer. If you are valuing a factory, the real estate valuer may be doing the buildings. You may be bringing in a plant equipment specialist to look at the actual equipment within the building, so the machines, etc., as that would form part of the valuation. You should mention within the scope of work environmental, social and governance factors. But I'll remind you just very quickly of what it says in relation to environmental, social and governance factors within the IVS 104 Data and Inputs Appendix. It states that ESG factors and the ESG regulatory environment should be considered in valuations to the extent that they are measurable. Not everything is measurable. It's a mixture of quantitative and qualitative information and would be considered reasonable by the valuer applying professional judgment. So when looking at the scope of work, and thinking about environmental, social, and governance factors, you should think about what would my fellow valuers do? Would they also include these factors within a valuation? And just diverting for a minute, we have a lot of information on environmental factors. It's something that we've often done. A lot of the social and governance factors are still very much in data gathering exercise, but many of these you probably already do. If you're looking at a residential property, you might be thinking about, are there good access to schools? Is there good transport? Is this in a locality with good facilities around it? These are social factors that you would normally be thinking of in your valuation. You must also state the type of report or other documentation being prepared and within your scope of work, and a clear description of how the valuation results will be reported, or a sample of the deliverable that would be supplied to the client. And this should include a description of the type and extent of supporting documentation that will be supplied in the valuation. For valuations, the scope of work must also state the restrictions on use, distribution and publication of the report, and it should also contain an IVS compliance statement. So if your valuation report is compliant with IVS, it should be stated within the report. Now, I can't state this enough, but the scope of work must be established and agreed between the client and the valuer prior to the completion of any valuation report. And the reason why we state this is in some fields, such as business valuation, and I don't know if many of you work in that, there is a process of discovery as well. So you may not fully realize your scope of work at the beginning of the instruction, but any changes to the scope of work prior to the completion of the valuation must be communicated and agreed upon in writing with either a revised scope of work or a letter to the client advising them. I would think that it would be preferable to do a revised scope of work, as the scope of work is also a protection for the valuer. If there are any difficulties at the end of the instruction, and let's say the client said you didn't do this, you can go back to the scope of work and say, here is where we agreed the instruction, this was not in there, and that is why I did not do that. And if during the course of a valuation engagement, it becomes clear that the scope of work will not result in an IVS compliant value, the valuation then will not comply with IVS. So it's very important within your scope of work, you state that you are doing an IVS compliant valuation. Now, the final section within the scope of work refers to valuation process review and value review requirements. And the first thing to highlight again is a valuation review is not a valuation. So it's not a way for a client to get a valuation on the cheap. The scope of work must state whether the valuation review is a valuation process review or a value review or both. And a valuation process review addresses compliance with IVS. A value review addresses the reasonableness of the value. It does this by looking at components of the value. It does not mean that you would be providing a new opinion of value. And further to our agenda consultation, this is one area that the Tangible Assets Board is looking at, and we are already considering including in the next edition of IVS, because standard setting is an endless process, which would be published in 2028, whether we are going to give more standards in relation to valuation review, or perhaps release a perspective paper, which not acts as market engagement, but is often a precursor to standard setting to deal with any issues people have in terms of understanding valuation reviews. Now, looking at the requirements for a valuation review, a value process or value review within IVS, it must include at a minimum the type of review being conducted, the agreed scope as to whether the review is a valuation process review, a value review, or both. the asset and or liabilities being reviewed, the identity of the valuation reviewer, the identity of the client, and the intended use, which you may also know as purpose. And the scope of work of an engagement that is either a valuation process review or value review must also state the intended uses if applicable, significant or special assumptions, and or limiting conditions pertaining to the valuation to be reviewed, the use and role of a specialist or a service provider if used as part of a valuation review. And just to be clear, a service provider, a service organization, which is a defined term, you may use a data provider to help you with the data. You may use a model provider to help you with the valuation model. And it should also state the procedures to be undertaken and any documentation that is to be reviewed. So that is a quick explanation of the scope of work. It's an extremely important part because the scope of work actually is that beginning bit. It's where you're agreeing with the client, what is the actual instruction that you're doing, and at the end of the day, I can't highlight it enough, it is also a protection to the valuer, because if there are any issues at the end when you issue the valuation report, you can go back and say, this is our scope of work, this is what we agreed together, and this is what we did. So I'm very happy now to take any questions that you may have in relation to this. So please feel free to ask me any questions on this. And if not, I'd be very happy to take any questions later.
Sir,
Yes,
I have a
please.
question. Yeah, good
Yeah,
afternoon.
please,
Yes.
please tell your name
Okay.
and then ask your question.
Moina Gosal from Kolkata. Sir, the valuation fees for a report and valuation review fees, how much differ? They differ. Are they same or they differ? If they differ, then by what percentage? Could you please? No?
Okay, so I believe your question is in relation to valuation fees. Yeah. Now we don't actually deal
Yes,
with
sir.
the fees ourselves. The fees are not specific within IVS. We don't give any requirements in relation to fees. These can vary from market to market. But yes, in most scopes of works, you would state your valuation fee as well.
My question was the valuation review and the proper valuation fees for a report. Say.
Okay,
Well,
so
let me-
Sandeep, over to you.
Yeah. Well, let me tell you that, this is absolutely, the fee portion is absolutely depends on the capacity of the person who is doing the job. If you think that your fee to make a valuation is more than a valuation reviewer, or if you think that being a valuation reviewer, I should ask more fee. So it may vary from, person to person. So therefore, standard cannot say anything on the standard never says anything about the fee. Thank you very much. I believe you have understood. Thank you.
Sandeep, we also had a question in relation to the basis of conclusion. So just to give you a little bit of clarity in relation to this, in my past experience where I participated in consultations, sometimes you give a response to a consultation, you spend a lot of time, and it goes into a void. And then the new standard comes out and you wonder whether people actually listened to what you said. IVS embraces an open, transparent, consultative standard setting process. So when we issue IVS, we also issue a basis of conclusion, which gives a summary not only of the consultation responses that we've received, but also the rationale of the board behind changes that are made or not made within the standards. So that is very much the way that we do it. So the basis of conclusion that we are referring to is another document that is available, and you will be able to find that on the IVSC website. So the next question is, who is responsible in the case of a work done by a specialist? Well, there's probably two answers to this. At the end of the day, the valuer is responsible because they hire the specialist. But if anyone was involved in litigation against the valuer because the specialist had done something wrong, the valuer would probably do a countersuit against the specialist because they've hired them on the basis that they're able and they have the experience to do the job properly. And if they haven't done the job properly, then the valuer would probably be in legal discussions with the specialist. But at the end of the day, the valuer is the overarching signatory of the valuation report. So they're the one who's responsible. They're the one who chooses the specialist. And specialists are quite common for us. It's very often that we work in conjunction with, for example, a building surveyor who can advise us of the condition of the building, whether there's any repairs that need to be done to the building, etc. So at the end of the day, the valuer is responsible, but then the valuer may take separate action against the specialist in case anything else is done. We've also got a question from Sugata, who's asking me to detail exactly what we mean by this. So when we're saying if in the valuer's professional judgment the scope of work is overly restrictive, then this may not result in an IVS compliant valuation. It's really down to the valuer's professional judgment. For example, if I was unable to actually inspect a property or view any of it, or if I didn't have sufficient information in relation to that property, it could be argued that it's over restrictive and therefore it is not IVS compliant. So it is basically down to the valuer's judgment. Do you have sufficient job information to do the job properly? I remember many years ago, I worked in international valuation and I had to value, I think it was 100,000 flats in a very short time in Switzerland, and they didn't have all the areas. And so I had to make an assumption in relation to the areas based on the areas that I had and the other properties being similar. And this would not be an IVS compliant valuation. I didn't have sufficient information. In fact, in my report, I wrote the assumptions I made and almost that the report was not worth the paper that it was written on, but this is what you've asked me to do. So this is what I have done. The next question, before I go to Saket, because I can see that you've got your hand up as well. What is the knowledge frame a valuer should possess for incorporating ESG variables in valuation? And this is a very good question because there is a little bit of upskilling and learning that we may need as well in relation to this. And the valuer may not know everything. You may have to hire an ESG specialist in some cases to help you with certain materials, etc. So all you can do is work on the information that's available. And when you later have your presentation on IVS 104, data and inputs, and I don't want to destroy the excitement of this, you'll notice that there's an appendix on ESG considerations. And within this, we give you examples of the things that you should look at, E, S, and G. So under environmental factors to consider, social factors, and governance factors. And the other thing to notice is these vary from country to country. It's not the same in every country. If you're actually looking at building infrastructure, facilities, water, electricity, this will have a greater prioritization than other factors. Perhaps in India, you could say that flooding is a big issue, particularly with your monsoons and other things, and that would be an environmental factor that you would take into account in relation to the building. Shaket, I understand, or Saket, apologies if I pronounced your name wrong. I understand you have a question. Please go ahead.
Yeah, good afternoon, Alex.
Good afternoon.
Yeah, I'm Saket Jain. I'm a financial valuer.
Nice to meet you.
Yeah, my question is that if we value the listed companies in India, so there the reference date is different and the financial statement what we get is different. Because the listed companies, they cannot give a financial statement as on today. So they will give the financial statement which is the last published statement. That might be 30th September or 31st December, whatever. So normally, if you take the valuation date is the, we get the financial statement as on the valuation date. But in the listed company, we don't get that. So, but still, is that valuation IVS compliant?
I think it's very much within your scope of work, and I'll probably hand to Sandeep on this in a second. But in your scope of work, you should agree what the valuation date is. And in that respect, you should be using the information that is available at the valuation date. It would be a bit like intangible assets valuation. I can't value with the benefit of foresight. So if I was valuing pre-COVID, and then I'm aware of everything that's happened since COVID when I'm doing my valuation, I could only take into account what was reasonably available to me, that information at the time of the valuation date. But I'll open it up to Sandeep to see if there's anything further that he wants to add to this, Saket. Sandeep, anything further?
Yeah, what I think, I mean, personally, what I feel and I used to do in valuation, I not only mention a valuation date is not a single date, because when we go to for valuation, when we report a valuation, there may be a number of dates which are important for that valuation reporting. Like when you are doing, for the purpose of capital gain tax in India. In that case, your valuation date is 1st April 2001, whereas your valuation reporting date is, it might be 10th January 2025. So there will be two different dates. And suppose sometimes it happens that for secured lending, your client have given you the work order 1 month back, say on 1st December 2024. You have visited the property on 10th December 24, but because of the paucity of the documentation, you are unable to complete the valuation report. So your client has provided you finally all the documents on 31st of December 2024. So therefore, in what is the actual motto of the scope of work valuation date is to make your client and other intended users understand what are the important dates that are there in the valuation report. So to me, valuation report date, have to specify, it may be 3 different dates: the date of work order, the date of valuation on which it applies, the date of reporting, and even the date on which you are receiving the documents. In case of financial reporting also, I mean, in case of financial instruments or intangible valuations also, what you have what Mr. Saketjan has referred, that in that way, in the scope of work, you can mention 2 different dates, what you are finding there, so that the basic requirement of a international valuation standard compliant valuation is to make everything transparent so that the end users can understand. So to make understand, if you think that you have to provide 2 different dates, you are at liberty to provide 2 different dates so that your end users can understand before acceptance of your report. Alex, your comment, please.
No, I think that's excellent. And one thing, I mean, when I went through it in the scope of work, is you should state the valuation date and the valuation report date if different. This is a requirement within the scope of work. And your valuation date and valuation report date, to be honest, will normally always be different because the client will ask you to do it at a specific date, and then you have to do all that work. So I would agree totally, but at the end of the day, the main thing is transparency. You should agree with the client, you should agree with the information that you're giving. And I empathize with you, Saka. I mean, I had one where the day before a valuation report was due to be issued, the client suddenly decided to give me new measurements for 120 tenants. And I said, well, this is going to take me a little bit longer because there are a lot of assumptions based on these measurements and it takes a while to adjust everything. So, you know, it's always good that the client gives us information as quickly as possible. The practical reality is this is not always the case. You have to use the information that's provided with you. But just be clear, Saket, within your terms of engagement, the dates that you're referring to, and often the reporting date will be different from the valuation date. And often there is a lag in receiving information, or when we have to inspect, it takes time as well. So I understand that, but also state it within your report. So within your report, you would say, this is the information that I looked at for my valuation. So I hope that helps, Saket, with your question. Does anyone else have any other questions? Very happy to take some. Saket, yes, back with you.
Yeah. So, like, my question was a little different. See, as we know, the date of appointment is different, date of valuation report is different, and valuation reference date is different. That we already know it. My question is that normally we get the financial statement is on the valuation date. Okay. Suppose someone is to do the valuation as on 31st December, it means the company will provide the cutoff financial statement as on 31st December. But in case of listed companies, that is not possible because you can't provide selective information to the valuer, because the company can provide only those information which is in the public domain. So in the public domain, if they have given the financial statement as on 30th September, so they cannot give me any information which is later than 30th September. That was my question.
So I think with that, within your valuation scope of work, you should state the information on which your valuation has been undertaken. So if the latest information is the 30th of September, you should state that for the purposes of this valuation, I've used the information available in the company report on the 30th of September, and you would still be compliant with IVS in doing that. So I hope that helps. I do understand that there's often delays in information, but you can only use the information that is available. I would also point out that IVS integrates with other standards, so we're made to work together with IFRS, etc. But if you're dealing with financial reporting, the correct standard to refer to in relation to that is International Financial Reporting Standards, which has other requirements as well. It's not International Valuation Standards, though you can be compliant with IVS and IFRS, and we are in contact and we try to discuss shared projects with technical directors on the International Accounting Standards Board, such as intangible assets and internally generated intangibles. So I think if that's the information that's available, that's what you should use. So hopefully that answers that question a bit more. If there's still difficulties in relation to that, please feel free to send myself and Sandeep an email. Mine is aaronson@ivsc.org. You'll be able to find that information. We do have a financial instruments board, so we can always check with them and say there's this challenge in relation to India when dealing with listed companies and financial reporting. Do you have any further advice that you can give? But I would say that for financial reporting, please look at IFRS. I hope that helps for the moment. I will just quickly type in my email, but please notice that I am quite busy. So as much as I would love to receive your emails, please do not send me 300 emails because it would take me a long time to deal with it. And I'd probably just pass them on to Sandeep, who would have a similar issue. But I'm very happy if there's anything that you require clarification on, we're very happy to help. So what I've done is I've just posted my email in here as well. Yeah, please use it sparingly, but feel free if you have further questions. We've got one more question here. Is it necessary to disclose special assumptions in detail at engagement letter preparation stage, as it is not possible to identify the same at this stage? So I think this actually really deals with variation of scope of work. You know, I know that in business valuation and sometimes even in real estate, I had ones where I was doing a valuation for Philip Morris of a cigarette factory. It seems very appropriate, doesn't it, Sandy? But in Serbia, and they didn't realize that as the country was moving from communism to a capitalist system, that there were 50 other buildings that they had brought along with this cigarette factory that they didn't realize was in the valuation. And therefore, I had to do a variation of the scope of work. I had to issue another scope of work because there was an additional fee as well, saying that in addition, I understand that you want me to look at these buildings as well. So if you do have a variation within it in terms of special assumptions, if you don't know them all at the beginning of the instruction, you should definitely either do a revised scope of work or send a letter to the client agreeing that this is what you're going to do. Remember, it's very important that the scope of work is about what you are doing. The reporting is about what you have done. Often there are difficulties in the report sometimes where the client might say you haven't done this, and that scope of work is the document where you can turn to and say, this is what we agreed what I was doing, and these are the variations that I agreed what I was doing. So you should always try and memorialize them, put them in writing. It's going to be down to your professional judgment, whereas the variation is just de minimis and requires a letter, or whether it is such a major variation that you think, no, I'm going to issue a revised scope of work. So I hope that helps you. You know, I do accept that not all special assumptions are known in detail at the engagement stage, but as soon as you do know them, you should advise the client. Just see if there's any other. We've got sources of information. We state the financial received from management. Do we have to state what assessment we've done on the financial statement? From my point of view, I believe that you should state what you've done within the scope of work. When I went through it, you should put the information that you've relied upon and any checks or verification in relation to that information. So from my point of view, yes, you would have to do that. So Ashika, I hope that helps with that. It's actually the valuer's job. You shouldn't just take information at face value. You should actually look at the reasonableness of that information and you should check it. I remember many years ago, I did a valuation for some clients and they very helpfully provided me with comparables. Had I taken their comparables, I would have got the wrong valuation because I discovered that they'd set up a subsidiary company, brought their own properties, and then sent them to me as comparable evidence in order to get a higher valuation. So you do have to be cautious on the information that's supplied. You should check it. I don't know if you want to add any more to that, Sandeep, at this point in time.
Yeah, actually, I would like to add here, Ashika, one point that what we are thinking, commonly we think that a scope of work, what we commonly think about scope of work and what is there in the IVS scope of work a little bit different, because scope of work, this scope of work is a part of your valuation reporting also. So once, because everything you have to, whatever you are writing here, whatever is given in the IVS 101, that is a part of your valuation report. So it is not only a work order. In work order, it's scope of work, we said that what is actual scope of my job, but it is something more than that. Many things are to be incorporated, which you may not know at the beginning of the valuation. When the work has been assigned to you, that time you might not be knowing that so many things are to be added, so many difficulties you are going to face. Once you face the difficulties, once you have that, negative components, or the special assumptions which may not be there until you visit the property site. Once you visit the property site, you have found that it's not possible. So that will come into in your special assumptions. So your scope of work finally will be completed once your valuation report is complete. So, and that will become a part of your valuation report. So therefore, whatever is there as per IVS 101 is an mandatory part of your valuation report, and you have to include everything. What in your initial question, I have found one question that whether we will provide a detailed special assumptions here. The answer is no. You mention the points in the scope of work under the head of special assumptions, and in your another chapter of special assumptions, which might come at the end of your valuation report, because regarding format, IVSC never gives any specific format. IVSC always says to be a IVS compliant report, the valuer is supposed to make its own format of valuation, but which must include all the which must in compliant with all the valuation standards. Format is of your side. That is why you might keep that special assumptions at the very end of your valuation report or in between. That is up to you. But yes, under the chapter special assumptions, you can give the special assumptions in detail, but in scope of work, you can make them concise as far as you can. In that way, you can put up your report in the valuation reporting format.
And,
So,
go
yes.
ahead, Sandeep. Sorry.
Yes, Alex, please.
No, I just wanted to highlight something from David Brandon as well, who typed in the comments. David Brandon, for people who don't know them, works as technical director at API, the Australian Property Institute. And I think it's very important to highlight what he says here. The valuer is responsible for the opinion of value and needs to be able to point at verifiable facts that inform their reasoning and analysis. And we do state that. So when you do get to your valuation report, you do have to provide your rationale for your valuation. It's not just that I came up with this number. And also, when you are looking at your scope of work, you should be stating the extent that you are verifying the information that's provided, and also that information that you're going to be looking at. And I can see David's come on camera. Happy New Year. It's been a while since we've spoken. Hopefully we'll catch up soon. And thank you very much for your input there.
Hey, Alex, I didn't want to hijack anything. You guys have done an absolutely outstanding job, so keep it up. So happy to throw in any comments or take questions. The global industry or the global profession needs to work together on this sort of stuff.
No, I agree totally. Thank you. And I believe we've still got Sandeep. I don't know if it's a legacy hand from Saket, but I realize that you've also got to you have a presentation yourself. So maybe at some point we'll stop on questions, let you present, and then take some more. But Saket, do you have another question? Because your hand still seems to be raised, or in IVS terms, we sometimes say, is it a legacy hand? So
it's a legacy
is it
hand.
one,
It's a legacy hand.
Okay, thank
Yeah.
you.
So I must welcome David on behalf of AARVF for joining here. We are delighted to have you people here participating. Like Ron is there from Israel, is here, Alex is here, and Nicholas joined. So it's I believe that all the participants are benefited by your thoughts. Well, thank you very much, Alex. So let me proceed with my presentation. Actually, you people, that IVS is principle based, and many times we had discussion in our boards that why if some illustrations be given in the standard, it might be a little bit easier for the users to understand. But as because this is a principle based standard, so we do not provide illustration. That is why in the training program, I designed my presentation with illustration. That is what Alex has explained right now from the IVS 101. I would try to give you an example from a tangible asset, like a apartment valuation. So let me share my a part of that scope of work report, so that and through that I would try to explain you what is there in IVS 101 and how you have to incorporate that IVS 101 in your valuation report, right? So this is 101 is the scope of work, and at the beginning it started with that this section requires the client and valuer to agree the scope of work for a valuation or valuation review that is appropriate for the intended use. It provides the minimum valuation or valuation review requirements for that scope of work. You see, they uses word minimum, right? So that means that you can add, but this is the minimum one which ought to be there in your scope of work. And again, what I already told you, that this scope of work is not only a part of the work order, but the scope of work is actually an inseparable part of your final valuation report. Well, let us discuss the matter with an example of a tangible asset, which is an apartment building having a number of apartments there. And the first one that we discuss in the scope of work is this part, the asset or liability being valued. So what is this asset? How do we put it here? The asset or liability is being valued in my report. Here we are telling it in that way. The asset comprises of the leasehold interest, because it is necessary to explain what kind of interest your asset got actually, whether it is a freehold or a leasehold or something else. So this asset comprises of the leasehold interest of the remaining term period of 90 years with right of renewal at lessee's option of the property, comprising of 50 flats and 9 garages at Swati Housing Complex, Hathibedia, Holdia Township, PS Holdia. That is the address of the property. Along with that, we are providing a few small pictures so that at the very beginning, the client could understand, or the intended users could understand what kind of property the valuer is going to value. And along with that, the boundary of the premises is required to be given, as well as the coordinate of the property. So here is the valuer must give a gist of the asset at, I should say, it's a bird's eye view of the asset, little bit of description, a little bit of photographs, boundary declaration, boundary, as well as the coordinate of the property can give a total picture in a very nutshell to the end users as well as your client. The next part, which is mandatory in case of is the second part, that is called who is your client. That should be given there. Who is your client here? The client of this valuation report, you have to write, is Messrs. Holdia Riverside Estate Limited, having their office at such and such place. So your client means not only a name, but it needs to describe your client with its either residential address or business address or whatever, where anybody can find the client, and a small description of the client is also required in your scope of work, second point. In the third point, it is written that intended use, if any. Now, I do not understand. I would here itself, I would request Alex, why if any is given in the standard? Because no valuation is there unless there is an intended use. Then why we are putting it, if any? Alex, can you put some light on it?
Yes, this is a good question, and it's something the board will be discussing as well, as I know that it's a subject of some confusion. But sometimes you might just be doing it for internal measures. So if you were, let's say, a development company, you might be doing a quarterly valuation just to check the value of your assets, but it wouldn't be for secured lending. It wouldn't be for financial reporting. It would just be for internal management processes. And that's why we put, if any. Now, the argument that we've been having as a tangible assets board is that still an intended use, even if it's for internal management purposes. So that's something that we're looking at. We always look to clarify and improve the standard. So if any was really dealing with when there wasn't a specific basis of value where you could put it down to, this is for financial reporting, this is for secured lending, but it's something we might think about in future editions of the standards, or it's something we might add more clarity on. But I hope that helps, Sandeep.
Thank you very much. Thank you very much for this clarification, because I believe that along with me, the participants also have a little bit confusion, though especially those who are practicing in the field of tangible asset, what you have already mentioned. So, and at the same time, I would like to tell you that from this edition, the word purpose will not be used. In the scope of work, you have to write the intended use only, right? So but actually intended use is the purpose. Next part comes as intended users, if any. Well, here also initially I have one confusion, that your client is also an intended user. Then, but it is clearly defined in the glossary, the definition of intended user, not only glossary, here itself, the intended users, it says that any party as identified by the client in the scope of work as a user of valuation. So actually, I believe that previously the other intended users is actually given the term intended users, as because in the previous edition of IVS, there was no term as client, but now the word client has been introduced. So when client has been introduced, so client can never be another intended user. And that is why it's a very important point to note that an intended user has to be identified by the client. That means valuer either verbally, it is better that the valuer take a note or anything in writing or email, should know that who is the other intended user. Only then the valuer could write, because it specifically says any party as identified by the client in the scope of work as a user of valuation. So therefore, you must note it carefully that you need to know from the client only who could be the other identified user, intended users of this valuation report. Like in this case, the client has identified the statutory auditor whose identity is not disclosed of HREL as the intended user of the report. Now, if the identity of the statutory auditor be disclosed by the client, then we have to write the name, right? Messrs. Deloitte or Messrs. Pricewaterhouse or Messrs. KPMG, in that way. But here the client has said that the valuation will be used by the statutory auditor. Therefore, we have to write here, we do not know the identity of that statutory auditor, right? So next part, we are going into the valuer. Now, who is a valuer? And the valuer is defined in the glossary. So what has been given as valuer, as has been given in the glossary, as well as in your valuer here also, I mean, in 101 it is stated the valuer may be an individual, group of individual, or an individual within an entity, regardless of whether employed,
क्या सर
internal, or engaged, contracted. Next
क्या
points are
सर
very important. Possessing the
क्या
necessary
कर रहे हैं
qualifications,
सर को क्या करना है
ability, and experience to execute a
सर ये
valuation
नहीं चलता
in an
सर सर्विस करते वक्त आप नहीं पूछते अभी इतना सब फॉर्मेलिटी चाहिए तो क्यों चाहिए सर
possessing the
अब
necessary
तक तो हड़बड़ी
qualifications.
में काम करवा लेते हो अभी ये सब
Mr. Nitin, would you please mute yourself? Mr. Nitin, thank you so much. Possessing the necessary qualifications, ability, and experience. These three things are very important that in your scope of works, these three things are to be stated. So that is why we have put it here in the scope of work. That is Sandeep Kumar Dev. Then I have given what is my position in my company, and then the qualification, which will create a confidence on my client's mind that I have got a required qualifications in valuation, and then it needs to have the professional attachment, and finally my registration, my license, I mean the valuer's registration, valuer's license, as well as finally the experience with valuation. These points are need to be there, which is specifically written in the scope of work under the word valuer. So therefore, and it's better to provide, if you want you can put up a photographs, if you do not you cannot, but it's better to give a photograph. That will also create a confidence in the mind of in your client. The next point we are coming is valuation currency, which is already explained by Alex, that in different in evaluation the valuer may confront with different kinds of currency. Like what kind of currency? In a plant and machinery valuation, the currencies there may be number of machines which are imported machines. So in those cases, some machines may be imported from Italy, some machines may be imported from Germany, some machines may be imported from China. So all these machines are generally either imported in the form of dollar or in the form of that country's currency. And when you are receiving the invoices, if it is available, then those currency, the figure will come on those currencies only. But the currency used in your valuation report should be the same. So that it is very much necessary to mention that which kind of currency you are using all through your valuation report. And that is why in the scope of work, the valuation currency is very much important to mention. And here the currencies like this, Indian rupee is the currency for this valuation and this final valuation report or conclusion. The next point is valuation dates. We elaborately discussed the importance of valuation dates. Here you see this way we represented the valuation dates. Like first we have written the date of work order is this much, the date of inspection is this much. You see, you might think that how the date of inspections becomes 2 days earlier than date of work order. The date of work order came, the date of work order, the official work order came actually on 5th, but verbal work order, they have already told that it's a very important work and we need the valuation report immediately. The order to send you the order is taking a little more time. So by that time, if you kindly make the inspection. So the inspection may be made 2 days earlier. The date of value measurement is, you see the difference. The date of value measurement is 31/3/2025. Last date of receipt of relevant documents 3/4/2025. And the date of valuation report is 5/4/2025. 2020. No, it should be 2025. Now what happened? I tried to change everything in 25 because we are discussing on the IVS 2025. That is why the future dates have been provided. And then came, like, next one is the basis or basis of value. That's a very important thing. That is, I always used to say that this is the foundation. This is the foundation of evaluation. So as a foundation, your client should understand on which, what is there, on which the entire valuation will be based. So it is very much essential to explain the basis or basis of value in this point of scope of work. So what we have to write, the base of value of this valuation exercise has been chosen following IVS 102. Then what is there in the IVS 102? According to IVS 102.10.01, basis of value describes the fundamental premises or requirements on which the reported values will be based. It is critical that the basis or basis of value be appropriate to the terms and intended use of the valuation. Since a basis of value may influence or dictate the valuer's selection of methods, inputs, and assumptions, and the ultimate value. So from here, we have come to know that foundation to foundation, that is what the foundation to the basis of value is also, there is one thing. What is that? That is called the premise of value. So before accepting a base for your valuation calculation, you need to, first of all, you need to finalize what shall be the premise of value. What shall be the premise of that? Only then you can go to the next part. What is that next part? That IVS, then we are telling that what are the different kinds of value. You see that IVS 102.20.02 provides us with the following IVS defined basis of value. What are those? Market value, market trend, equitable value, investment value or worth, synergistic value, and liquidation value. There is a difference between IVS 2022 edition and 2025 edition. In 2022 edition, this market value, market trend, equitable value, all these are part of the standard in there itself, in the 102. But here, all these things have been put as appendix. So that is why it is written A10, A20, A30. Then you know very well that apart from the IVS defined value, there are also IVS non-defined value or some other value base which are not there in the IVS. So what is that? And according to IVS 102.2003, other bases of value may be required for financial reporting, tax reporting, or in other legal or regulatory contexts. Like in India, when we have to do the valuation of capital gain tax for the purpose of tax reporting, in case of capital gain, our valuation base is chosen as fair market value. Well, this fair market value definition is not there in IVS. Then what to do? The fair market value definition, you have to take it from the income tax, the IT Act. The IT Act in India, it defines the fair market value, and you have to take that fair market value definition from that IT Act and you have to provide it here for the understanding of your client. And even then, although we are doing a fair market value base, which are not there in IVS, even then your valuation report will remain as a compliant. Why it is compliant? Because you are following the local law, you are following the local statute, and the IVS is always straightforward, and it says that when there is a conflict or there is a difference between the IVS and the local law, jurisdiction or regulation, then the local law, statute, regulations will prevail over IVS, and valuer has to follow that. And even then, that valuation will be treated as an IVS compliant valuation. So that is why here also, you see, in this case, our valuation report, this is for the purpose of financial reporting. So if this is for the financial reporting, we have to see not only IVS, but we have to consult IAS also, that is Indian Accounting Standard. So your valuation report should explicitly says how you are doing the valuation, how you are choosing the valuation basis. So here we have said, according to IVS 102.20.03, other bases of value may be required for financial reporting, tax reporting, or in other legal or regulatory context. Depending on the promulgator of the basis of value, the same words may be defined differently or require different valuation approaches. Therefore, care should be taken to identify, articulate, and apply the appropriate basis of value for a given valuation. A non-exhaustive illustrative list of other bases of value is included at IVS 102 Basis of Value Appendix A70 to A80. This is a part, whatever we have written here, if it has been taken from the IVS 2025 102 only, 101, 102 only. According to again IVS 102.20.04, in accordance with IVS 101 scope of work, the basis of value must be appropriate for the intended use, and the source of the definition of any basis of value used must be cited or the basis explained. So that is why we are explaining everything. So what we are telling after that, according to IVS 102.20.05, the valuer is responsible for understanding the regulation, case law, and other interpretative guidance related to all bases of value used. According to IVS 102.20.06, the basis of value illustrated in IVS 102 basis of value, Appendix 70 to A70 to A80 are defined by the organizations other than IVSC, and the onus is on the valuer to ensure they are using the relevant definition. So with all these, we have given a background, how we are coming to choose a basis of value. That will, because as a valuer, as a professional and technical person, you know how you are reaching that your conclusion. But when you have to understand that your scope of work might be read by someone who is not as competent as you, your client might not be technical. So it is your duty to let your client understand how you are reaching the foundation, how we were choosing the foundation of your valuation report. So that is why next we have explained, in our case, the client has specifically assigned the job to the valuer to estimate the fair value of the leasehold interest of the real property under question for the purpose of, so here it is for the purpose of, we might have to change here the word purpose, for the intended use of financial reporting in India. The financial reporting in India is done following Indian Accounting Standard. So this is a transition. This is the way we are now handing over the baton from IVS to Ind AS. But we have to be very clear why you are doing so and how you are doing so. According to Ind AS, the entity has to estimate the fair value of a non-financial asset for the purpose of financial reporting. Therefore, the relevant basis of value of this assignment should be fair value. Now, which definition of fair value we have to use here? Not IFRS, not IVS. We have to use here Ind AS, that is Indian Accounting Standard, because that is the requirement of the statute, that is the requirement of the company law, and this valuation has been made on under the Companies Act. So what Ind AS 113 defines, then we have given the definition. Ind AS 113 defines fair value as the price that would be received to sell an asset or paid to transfer a liability in an orderly transaction between market participants at the measurement date. So therefore, you see here through this illustration, we try to explain how, first of all, you are to explain from IVS what are the bases of value, then how the basis of value, the baton has been transferred from, and why the baton has been transferred from IVS to Ind AS. And then we have to follow the definition of fair value, what is given not in IVS, but in Ind AS 113. So that is why we have fixed up the base of that valuation report in the scope of work, which is fair value. And then immediately we have defined what is fair value. Next point is the nature and extent of the valuer's work and any limitation thereon. It's a very important part of writing a scope of work, because what Alex has said a few minutes back, that scope of work is actually, it covered the danger. It covered the danger in future for the value. It protect the valuer, because if you can identify the nature of work and the limitations of the work properly, that will save you for future complexities from your client as well as from being sued. So let's see in this case how we have dealt it. The extent of valuer's work is limited to measurement of the fair value of the leasehold interest for remaining years of 90 years down period of flats and garages of HREL at Swati Housing Complex, following Ind AS 113 and providing a written opinion thereof in accordance with the international valuation standard. So that is the basic nature of the extent of work. Then what we are telling, the structural drawing of the building. Structural drawings of the building are not available, hence detailed engineering description of the structures are not provided in this report. So that is a limitation. And again, we have written the following are the limitations of this report. Any change in the statute or any applicable building bylaws or LUDCP may lead to completely different conclusion of this valuation exercise. This report is valid for the purpose of financial reporting following Ind AS 113 only, and not for any other purpose. Here it will be intended use. We are changing it. All information presented in this report is true and accurate to the best of the valuer's knowledge and belief. These are the general limitations that we use to provide almost in every valuation report. Neither the valuer nor any employee of Mr. Sandeep Kumar Dev has any current or contemplated future financial interest in the property appraised. All estimates of value are presented as the valuer's considered opinion based on information obtained during the investigation and do not represent an offer to buy or sell. Testimony or attendance in court is a very important limitation that every valuer should write. That testimony or attendance in court by reason of this valuation is not a requirement of this engagement unless such arrangements have been made in advance and the client is ready to pay the fees against such engagement, such expert evidence. This report must be used in its entirety. Reliance on any portion of the report independent of others may lead to the reader to erroneous conclusions regarding the property values. No portion of the report stands alone without approval of the author. So you see, these points are the points which will protect you from any future complexity. The effective date of the valuation sets the basis of value, which is based on the purchasing power of the Indian rupee as of that date. The intended use of the valuation also sets the basis of value. This valuation report shall not be used for any other intended use apart from that mentioned in this report. Values vary from time to time in response to changing market conditions. The valuation is based on available information as at the date of valuation. No warranty can be given as to the maintenance of this valuation value into the future. Therefore, it should be reviewed periodically. The publication of this valuation report in whole or in part or any reference hereto or to the valuation figures contained herein or to the name and professional affiliation of this valuer without the written approval of the undersigned is completely prohibited. So these are the limitations, these are the general limitations rather we use to put in our valuation report to protect ourselves from future complexities. The next part of the scope of work, mandatory one, which has been given is that the nature and sources of information upon which the valuer relies. Another very important thing. It is very, very essential to maintain the transparency of the valuation, that valuer should disclose the sources from which he or she has collected information, so that the client or the intended user can check the accuracy of the sources, the reliability of the sources. This section and use of data to be used as inputs in this valuation has been done in accordance with IVS 104. The aim of this valuation is to maximize the use of relevant and observable data, because a new portion, a new standard has been introduced as 104, which is the data and inputs. So the aim of this valuation is to maximize the use of relevant and observable data to the degree that it is possible. Investigations made during the course of this valuation assignment have been appropriately carried away for the purpose of the valuation assignment and the basis of value. Sufficient evidences have been assembled by means of inspection, inquiry, computation, and analysis to ensure that the valuation is properly supported. The following are the sources of information upon which we relied upon. So next, giving the background, we have provided what are the sources of information, the data which we used in our valuation report for calculation, for estimation of the fair value. The first one is the name of a government website for registration of properties. The second are the following registered documents, 38 different lease deeds on which the valuer relied upon, and then 21 different lease deeds, then sanction building plan of the question building, but the sanction building plan did not contain any structural details, it is only architectural plans. A posting having property ID number such and such. So 3 postings which we relied upon to get the comparable property evidence, and 1 registered sale deed evidence. So finally, all these evidence used in this report are level 2 inputs as per Ind AS 113. So we have identified what kind of inputs we have used, so that again it will create another kind of confidence into the mind of the end users, that the valuer has used and disclosed everything, whatever is possible to disclose. Then you see the spatial assumptions. My friend have asked, I mean, in the questions, that whether we will put all the spatial assumptions here. Yes, you have to put all the spatial assumptions here, because previously in 2022 edition, it was assumptions and spatial assumptions. Assumptions / spatial assumptions, but here it has been provided only spatial assumptions. So whatever are common are not spatial assumptions, you need not have to provide. So only provide the spatial assumptions. What are those here? The lessor shall provide permission to transfer against every request, because in the lease deed itself, it says that permission is needed before transfer of this leasehold interest. And if we do not consider that the property, the permission will be given, then this property, the fair value cannot be estimated, not possible to measure. So the first spatial assumption, the lessor shall provide permission to transfer against every request. Next, the yield of leasehold interest is 1 more than freehold interest, because it might be 1.5, 2, it might be 3, but here we have assumed as only 1 more than freehold interest, because we do not have any strong evidence in support of that 1 more, only 1 more, or not less. So therefore, we have to make it as spatial assumptions here. The property is free from contamination or other environment risk. Again, there was no evidence, so that we can put it here against this assumption. So it remains as a spatial assumption. The physical and legal characteristics of the land and building asset of Messrs. HREL at Swati Housing Complex on 31/3/2024 was the same as on 3/4/2023, because we have to report the valuation date of, the valuation report is applied on 31st March 2024, whereas we visited the property 3 days after, that is 3rd of April. So we assumed that there was no difference between the physical as well as as well as physical, as well as, the there is no difference in physical as well as, legal characteristics of the property. So that assumptions is necessary. The SBA of the first comparable, that is super built up area of the first comparable, is 20% more than the covered area, and that the second comparable is 20% more than the covered area. Then comes the type of report, the type of report or other documentation being prepared. The valuation result will be reported in the form of a IVS compliant valuation report, both in hard as well as soft copy, with all the supporting evidence as annexure. So here I would like to take the opinion of Alex, whether this statement against this heading is correct or not. The type of report or other documentation being prepared under this heading, shall we write this? The valuation results will be reported in the form of a IVS compliant valuation report, both in hard as well as soft copy, with all the supporting documentary evidence as annexure. Is it correct, Alex? Could you please?
Yes.
Okay. Thank you.
Yes, this is correct. I mean, in some cases, we're aware that banks may have a specific reporting structure that you have to follow. You would still be an IVS compliant report, but you would need to make sure that any elements that aren't included in the actual report that they've requested you to do is included in the documentation. But no, that statement is perfect.
Okay, thank you very much. So, and next one is the restriction on use, distribution, and publication of the report. It was there in the last edition also, and here we have written usually the use, distribution, and publication of this valuation report in whole or in part, or any reference hereto, or to the valuation figures contained herein, or to the name and professional affiliation of this of this valuer outside the purview of this valuation contract without the written approval of the valuer is completely prohibited.
So just on that, if I could just add one point, Sandeep, that we're aware of, people should be very careful on the use of AI, because sometimes we found with a few organizations that they've accidentally found that they've broken those restrictions because they used AI and suddenly their report was in the internet. So yes, it can be a very good source to use technology, but on open source AI, you'll find your information is available to everyone. Even in closed source, you could break lines of separation. So do be careful when you're thinking about distribution, how and in what ways you use technology, because I believe, Sandeep, we've noticed some issues of some very big surveying firms where they found that their report structure has suddenly ended up on the internet.
Okay, thank you, Alex. So that is the end of my presentation. And if anybody has any question, they can raise hand or put up the question there.
Good afternoon. I have Moina Ghoshal.
Yes, please.
Yes, sir. Could you share your report, that IVS compliant report? Because last time you shared, somehow I missed it. So I need that report for reference.
Report may not be shared. Actually, the AARVF may share the presentation. That is possible.
Okay, sir. Thank you. Thank you.
And Sandeep, just in relation to a question we received from Shoswi while you were speaking, they asked if they could get notes for this. I don't believe that notes are available, but I understand that the presentations are available, and I think there may also be a recording of this presentation that's supplied by ARVF. So I just wanted to check that that's the case.
I will share the presentation to you, not a problem. So any question from anybody?
Is there any technical or legal difference between the wordings measurement of fair value and estimation of fair value? I believe that this more relates to IFRS. He's put that this is a question for yourself, Sandeep. I mean, from my point of view, it should really be the same thing, because a valuation at the end of the day is an estimate, and the valuers are supplying their opinion of value. But over to you, Sandeep.
Yeah, what you have said is absolutely right, Alex. Actually, that in all Ind AS, I mean Indian Accounting Standard or IFRS, that is International Financial Reporting Standard, they use the word measurement of value, and whereas in tangible assets, in generally we used to use the word estimation of value. But basically, there is no difference between measurement of value and estimation of value. As because this report has been used for the purpose of financial reporting, therefore, everywhere we use the word measurement of value. If this report is to be used for the purpose of secured lending or capital gain tax, I use the word estimation of value. That's the difference, nothing else. Alex, please.
If I could just add to that the point raised by David, because it was often a confusion for me when initially many years ago I was looking at IFRS and they kept talking about measurement. And I was thinking, what, the measurement of buildings? Because that's what it is in tangible assets terms. But in accounting, they use measurement. So it's an accounting term. And remember, when you are doing financial reporting, the correct standard to comply with is Indian financial reporting standards. It doesn't mean that you can't also comply with IVS. So it's just that sometimes we use different terms for the same thing. And as much as possible, we try and harmonize the terms across our industry, but there will always be differences. So whereas we refer to estimates, they refer to measurements.
So one hand is raised by Mr. Arun Borse. You can unmute yourself and ask your question.
Sir, I have one question.
Yes,
Can you
Mr.
hear me,
Arun.
sir?
Yes, we can hear you. Please.
I have one question. All these amendments to IVSC, which is going to be enacted from 31st of this month, will supersede all previous provisions regarding all the clauses and subparts of the IVSC?
Yes, they will supersede all different previous provisions, but there shouldn't be conflict. There should be conflict between them. So we're always looking, sir, to improve our standards. So the latest edition gives further clarification. You'll notice that there's new sections on topics such as quality control and the individual valuer, data and inputs, where there's further requirements. I believe valuation methodology was valuation models was previously a subset of valuation approaches. It is now a separate chapter with an IVS, and also there's additional requirements in relation to documentation. So all these requirements supersede the previous edition, but it doesn't mean that any valuations previously that you've done are wrong. It's just that we've added additional requirements. So I hope that helps you and gives you an answer to your question. Thank you.
Sanjeev Agarwal, please unmute yourself and ask the question.
Alexander, thank you for giving insight of the new standards. I have a doubt. Suppose I'm carrying out any assessment of, say, 2021 and carrying out the assessment in 2025, which standard should I apply?
Okay, so it's quite a difficult question, that. And if you go to IVS framework and look at the compliance section, we had quite a long discussion, to be honest, with the boards in relation to this. A lot of people have the view that you should use the current standard. Other people said that if you're doing a capital gains tax 2001, you should look at the standard that applied at that point of time. And then there were questions like, well, what if you're dealing with a valuation that wasn't included in the standards at that point in time, such as inventory? So what we came up with at the end was transparency. please state the addition that you're using within your valuation. Always, we would prefer you to use the latest edition because that obviously is the best version of the standards, but there may be reasons why you may not. And in those instances, just make sure that it's very clear in your scope of work and in your valuation report the addition of the standard that you've used at that point in time. I don't know if you want to add any more to that, Sandeep, because we had some very long discussions across the boards in relation to just that topic.
Yeah.
Thank you, Alex. Thank you.
And in addition to that, in the last week, Kim also discussed it elaborately that if there is a requirement of the client and a contract is made accordingly, that the valuation is to be made on the year 2021 on the basis of that valuation standard prevailing at that time, then the valuer has to do it accordingly. Otherwise, all valuation should be made, what you have said, as per the latest available standard.
We've got another question from Ashika. Are we required to state ESG compliance in our report? Well, I'm not sure what the word ESG compliance means. That's quite a loaded term because it's complying with what. But what you do have to do is state the ESG factors that you are considering within your valuation report, and then and also within your scope of work. So your scope of work should state what you're considering. Your report should state what you have considered. And when thinking about ESG, you should use your professional judgment to think of what another similar valuer would do in those circumstances. What would they consider and what wouldn't they? Certain things with intangible assets are a given, such as flood risk and other things. You should always consider those environmental factors. There is also a lot of evidence within markets, not necessarily a green premium. I mean, in some markets, such as the UK, they've seen more of a brown discount, but there are certain tenants who will only go for buildings that have certain green credentials, and those are the buildings that let quickly and that get higher rent. So you don't talk about necessarily ESG compliance. You should state the factors that you've considered or are going to consider. So going to consider scope of work, considered valuation report. I hope that helps. Happy to take any further questions. We've got some questions that are sort of more technical. AARVF, it's about how to access the recordings and notes. I believe that AARVF will be able to supply you information in relation to that. Please note that we've just started the year, and it's amazing that AARVF even managed to do the first presentation on the 3rd of January. So I believe all that information is forthcoming. I don't know, Sandeep, whether we're going to make it all available at the end of the sessions or whether we'll do it on a piecemeal basis as they go along. But I do believe that that information is going to be made available to AARVF members.
Tuvendu has raised a hand. Could you please unmute yourself and ask the question?
Yes. So just wanted to check, would intended users be same as Reliant parties, or can you differentiate between intended users and Reliant parties?
So I'll start off and then I'll go over to Sandeep. But intended users can be quite complicated. If you're doing a stock market valuation, who is the intended user? Is it everyone who buys shares and invests within it? So we do make a distinction between client and intended use. But I think the question is more specific to the Indian market, so I'll allow you to answer that, Sandeep.
Yeah, I would like to refer what is written in the IVS 101. Intended users, if any, it says any party as identified by the client in the scope of work as a user of valuation. So if you go by that definition, it clearly says that we can write the name of the intended users to those only whose name has been given to the valuer by the client. Otherwise, we cannot write any name, and therefore it is absolutely the prerogative of the client whom he or she will identify as the intended user of this valuation report, apart from the client himself.
Got it. Thank you.
Manish, your hand is up. Would you like to ask any question? Unmute yourself, please.
Thank you, sir. Sir, as per IVSC is all about how to do a valuation. That means it describes the duty of valuers. But is anything there for rights of valuation, any kind of immunity? Suppose, sir, you are in slide number 30. You described that value may change from time to time and it should be reviewed time to time. Sir, is it the defense against indemnity bond?
I'll start off and then I'll hand to Sandeep. So I think we're referring to the bit it was in relation to limitations where you mentioned contamination, and it's been assumed that there's no contamination within the property. And if there is any contamination, then the results of these valuation may change. It was a standard clause that I would often use as well, because if there is contamination, it could actually turn a positive value into a negative value. I mean, contamination can be quite a significant feature. I might have as well, in relation to contamination, written something like, I've done a phase 1 environmental audit. This has not shown any difficulties, and therefore I've made this assumption. That would be more within your valuation report than within your scope of work. Or I may also say that I've done a phase 1 environmental audit, and I felt that there were issues, and I feel that an environmental specialist should be hired. So to a certain extent, yes, it does protect the valuer by stating what you have done and what you haven't done. And if there are issues that are subsequently shown, this could affect the result of the valuation report. I can't comment on professional indemnity. I'll hand that over to Sandeep, because it varies from person to person. It depends on the level of professional indemnity that you have and the insurance policy that you have. But I would state that it is a protection to the valuer to state that. But over to you, Sandeep.
Yeah, thank you very much. Actually, I'm telling you one thing. I believe that many of you or most of you are either engineer or architect who are participating here from India, or a chartered accountant or cost accountant. That means they are practicing in a different, in a profession. They are professional apart from being a valuer. Well, in case of a civil engineering construction, if there is no IS code, you could see the disastrous condition. If you do not write that the building, that the concrete is made by our M20 concrete grade, and the grade is given but not defined, in that case there would be disaster. How they will make the concrete? How would the pillar or the main? What is the strength? Nobody knows. So anybody can go and can sue. Here also, standard acts as a code. In engineering, we use different codes, and in valuation, we use the international valuation standard. This is our protector. If a valuer follows international valuation standard, being a member of an RVO or a BPO, whatever we say, and the RVO has accepted international valuation standard as the standard of its valuer, of its members, and the member followed the international valuation standard line by line and created the report accordingly and given a statement that it is in compliance with international valuation standard, then for any other cases, unless you are making a mistake, a malafide mistake, I believe that you are safe. You are safe from your indemnity clause. Because a bona fide mistake is always taken as a mistake, and you cannot be charge sheeted for that. So therefore, following a standard, following IVS, if you prepare your report and present it properly, I believe that you are safe in all the respects, unless a malafide intention has been found or you have made a gross mistake while doing the valuation, which could be tantamount to a personal mistake or a malafide mistake. So try to follow the international valuation standard or valuation standard that will protect you in future from all kinds of these type of problems. Thank you. Let me check if any hand is up. Yes. Shubhendu Shah, Mr. Shah, Shubhendu Shah, is it a legacy hand or you want to ask any question further? Legacy hand.
No, no,
Thank you. Yeah. So Mr. HK, I'm sorry, unable to pronounce it. You please, you have lowered your hand. Okay. So I believe that Mr. Akhil Prakash, would you like to ask anything? Mr. Akhil Prakash? No. Is there anybody who would like to ask anything or otherwise? Yes, please unmute yourself and ask. Yes, I have seen you raised your hand. Mr. Mahesh Gupta. Sir, please unmute yourself. Unmute yourself.
Okay. I have two
Please,
questions. I have
Two questions.
today. Thanks for giving me a chance to ask you. Number one, when you talk of scope of work, it is integrated with purpose of valuation. Am I right? So once the
Absolutely
purpose
right.
is different, scope will be different. And the party or client who is allocating the assignment, they may not be knowing ABC of valuation. So
Right.
it is a valuer professional who has to make his judgment for the scope of work and various ingredients involved. I think that should be the approach. Second question is to Mr. Alexander regarding ESG. Since there is nothing given in the IVS regarding measurement of ESG factors, when it will come in the IVS, and then what is the guideline when doing valuation, how much percentage, and which will depend on professional, it will be a lot of differences. Somebody may take 15% discount, somebody may take 25, somebody may take 5%. So what is the yardstick?
Okay, so
IVS
it's a good
has to define
answer.
this thing.
Well, first of all, I don't agree that IVS has to define this because we're an overarching principle-based standard, and that's more provided by your valuation organizations. There's no simple answer for ESG because it's different for every asset. So there is no thing, oh, we can all knock off 5%. However, I would highlight that we have published 2 perspective papers, the most recent one 2 months ago, I believe, Sandeep, on ESG
Yes.
and real estate
Right.
valuation.
Right.
They will give you further information on how to consider ESG within your valuations and the professional judgments that must be made. So I recommend that you have a look at those perspective papers. I think you'll find the information very useful. I would add them to this if I knew how to use WebEx efficiently to do that, but I'm sure that Sandeep can make them available to you, or you can find them through the IVSC website. So if you're looking for specific guidance in relation to that, I would suggest you look at our perspective papers, but there's no simple rule of thumb, unfortunately. Every asset is different. You can't just say, oh, knock off 5% here or 10% there. You have to think about the individual asset.
I would like to add, Mr. Alexander, my idea is not to ask you what the yardstick or the thumb rule. It should be for the purpose of measurement. Standard has to be there. Otherwise, IVS applicable will not be implemented as banks are asking. The report has to be complying to the IVS. So measurement standard, it may take some more time based on our data and all that.
So the standard is there. Okay, you go for it, Sandeep. Over to you.
Yeah. Actually, you see, standard is not a guidance for measurement or estimation of value. If you want to have the knowledge about how to measure a value or how to estimate a value, you have to get a book on valuation, and then you have to understand the art of making valuation or measurement. Or but standard is providing.
Probably you have not understood my question. I don't mean that we have to read what is the standard. I mean to say measurement of ESG factors. It will depend from person to person for the percentage because it's a professional judgment.
Right, you are. But because it is a very nascent stage right now, I believe that a lot of work is to be done for the proper measurement of ESG without making any thumb rule. So I believe that research works has to be made to how to measure, how to assess the effect of ESG on valuation. You are absolutely right, Mr. Gupta.
Thank you
So
very much.
next, thank you. One question has been made by Mr. Akhil Prakash that please provide a clear route how to access the recordings. Oh, I'm so sorry. Recordings, in fact, the organizers, that is assessors and registered valuers foundation, I believe that they are looking after all these matters and they will make the arrangement for this. Thank you. Anything else? I believe that no question is there and no raise of hand is also there. So may I request Rahul to request either Saurav or Rahul to offer the vote of thanks for today.
Yeah, thank you for such an interactive session. Thank you. And
so
asking,
Rahul, one point.
question.
Today we have finally crossed 100. I have seen 106 one point of time. So congratulations to everybody for making this program more and more enjoyable and attractive. Thank you very much, Rahul.
Thank you, Sandeep. So even last time we had crossed 100, but you were so engrossed in the first session, so yeah, you couldn't see it. But yeah, we will be keep crossing 100, so we'll keep making a new benchmark. So a heartful, thanks to Nicholas. I'm not sure if he's here, Alex, and you, Sandeep ji, for this exceptional presentation on the IVS scope of work. Indeed, these insights and detailed explanations which you provide, with on the topic, which is very informative for all the valuers, and the way all the valuers are, interacting, questions. They have so many questions, and keeping you engaged on this topic. It is a tremendous effort. So thank you once again on behalf of AARVF, and thanks to IVSC. On this beautiful session, and we'll meet next Friday, same time, same day. So thank you everyone for this session.
Thank you.
Thank you.
Thank you.
Also, I would like to
Thank you, sir.
inform all the valuers they will be getting the recordings of the session. I'm sure they must have received the recording of the first session.
Yes, sir.
On their email ID.
Yes, sir.
We will send you the email of this session as well.
Thank you, sir. Thank you.
Thank you, everyone.
Thank you.